Hi everyone, Joe Vitale, American Retirement Advisors with the Grading Investments Weekly Talking Points for the week ending November 5th. We want to wish everyone a very happy Veterans Day today, especially our veterans who have fought and sacrificed for our country. So let's get into stocks right now. Make sure you thank a vet, and we hope that they're having a great day today. We really appreciate them for all they did. Let's talk about equities. Equities advanced in most of the major market indices last week, especially strong gains in the U.S. small caps. The benchmark S&P 500 rose 2%. For the NASDAQ added 3.08, and the Russell 2000 gained 6.11% for the week. Now, the gains primarily reflected Friday's news of faster hiring in the U.S. and the discovery of an anti-COVID pill. Now, overseas developed markets, which is the EFA, rose 1.64%, while the emerging markets eased about 0.03%. In the U.S., consumer discretionary and technologies were the best performing sectors, while healthcare and financials were the laggards. Now, in fixed income, the Federal Reserve announced it would begin to taper its purchases of bonds, which has been a means to stimulate the economy during the COVID. Now, the Fed chair also stated that they had not set an agenda for raising interest rates, confirming both a steady labor market recovery and persistent inflation pressures. And Treasury yields fell and bond values rose for the 10-year maturities, ended the week at 1.45% yield, down 10 basis points. Now, one of the things that you're talking about is with the Fed, they're talking about inflation. We're seeing a lot of this. Inflation, not so much transitory anymore like they thought it was going to be transitory. While wages are going up, and guess what? Inflation is up higher than wages, which they say that the wages are higher. It's not. It's actually, inflation's up over 6% month for the year in October, as opposed to the wages at 5.5%. So this is especially difficult for those on fixed income, right? And you've got all these inflation pressures, but the Social Security, your pensions are not going up in the same pace as the inflation is. We are going to see, I think we've talked about some of it coming down over time, but wages, that's not going to be coming down. So we're going to see inflation pressures continue. We're going to see the cost of goods and services continue. I think with the supply chain bottleneck is starting to open up a little bit, so we're going to see that come down a little bit, where we're going to see more inventory on the shelves, but still we have to be conscientious of that. It's not going away anytime soon. Okay. Thank you for pacifying. Now let's talk about oil prices. They fell to a near 4-week low on Wednesday after the U.S. crude inventory rose 3.3 million barrels, which was more than expected. And West Texas crude ended the week at $81.27 a barrel, which was down 2.75%. Now, in economic news, companies increased hiring in October, adding 531,000 jobs, leading the unemployment rate to dip to 4.6% from 4.8% in the prior month, hitting a new pandemic low. Of course, we need people to get out there because there's so many job openings right now. They definitely need to be filled. So, however, the official rate continues to underestimate the true level of unemployment, since the number of people who joined the labor force only rose by 104,000. That left the rate of job participation at just 61.6% of potential workers. Company news: stocks of companies that are highly linked with the health of the population rose strongly last week after Pfizer announced extremely strong results from a late-stage clinical trial of Paxlovid, which is a COVID and antiviral pill, revealing an 89% reduction in risk of hospitalization or death. Travel stocks advanced sharply, with Southwest Airlines, which is a core selected contrarian choice holding, and Travel Plus Leisure, which is a G15 core select holding and contrarian holding, advancing 10.47% and 9.35% respectively. Also, the Las Vegas Sands, which is also in the contrarian choice, advanced 9.87%. Now, Pacira Biosciences, which is a G33 holding, reported quarterly earnings that were stifled by the impact of COVID and hospital procedures, because if they can't have hospital procedures, it's all COVID, they're not making money. However, management noted an uptrend in sales and expects a rebound in elective procedures that is likely to drive strong product growth for the remainder of the year. Its latest acquisition is also expected to be accredited to earnings in the coming year. So shares were up 11.11% for the week. That's it for the week. Don't forget, again, today is Veterans Day. Thank a vet, especially those who you love, who are close to you, and thank them for their service and for our freedom. And thank you for being part of the ARA family. If you have any questions, feel free to contact us at 855-756-5700 or visit us at aradvisorsinc.com. God bless you. We'll see you next video.